Welcome back to ES Giant, your trusted source for actionable ESG knowledge in Africa. Today's video is a must-watch for entrepreneurs, investors, and changemakers. We're talking about green finance in Africa and what you need to know. Let's begin with the basics. What is green finance? Green finance refers to financial investments that are directed towards sustainable development projects and initiatives, especially those that help address climate change, protect natural resources, or promote environmental resilience. This includes loans for renewable energy projects, grants or equity for climate-smart agriculture. Green bonds are issued to fund sustainable infrastructure climate funds, supporting eco-innovation or nature-based solutions. Why is this important in Africa? Africa is extremely vulnerable to climate change. We face water shortages, floods, crop failures, and energy gaps, all of which affect economic development. But here's the opportunity. There are billions of dollars in green finance globally, and African businesses can tap into it. In fact, international development banks, governments, and private investors are actively looking for projects in Africa that align with climate goals and deliver impact. Examples of green finance in action: South Africa's Just Energy Transition Partnership, a $8.5 billion investment package from global partners to help transition away from coal while protecting jobs. The African Development Bank's Sustainable Energy Fund for Africa, SEFA, provides grants and concessional finance to renewable energy startups across the continent. Green bonds: Kenya and Nigeria have both issued green bonds to raise capital for sustainable infrastructure and energy projects. So what does this mean for entrepreneurs like you? If you're building a solution that tackles climate issues, think clean cooking, solar tech, sustainable transport, or regenerative farming, green finance is your ally. How to position your business for green finance? Clearly define your environmental impact. Be specific. How many tons of carbon were saved? How much water was conserved? Demonstrate social benefit. Many green finance providers also care about inclusion, gender, youth, and rural communities. Have a solid governance structure. Transparency builds investor confidence. Know your metrics. Green financiers want to see performance indicators and scalable potential. You don't need to be perfect, but you do need to be intentional. Where to start? Explore the African Climate Foundation, SEFA, and the Green Climate Fund. Check out local accelerators with ESG or climate themes. Talk to banks that offer green loans. Final thought? Green finance isn't just for big infrastructure. It's for innovators and doers. It's for African entrepreneurs solving real problems in real communities. So if you're building with sustainability in mind, there's capital waiting for you, if you know how to access it. Thanks for watching. If you found this helpful, hit like, drop a comment with your business idea, and subscribe to ES Giant. Next video, we'll look at the future of ESG regulation in Africa and how to prepare. Until then, stay green, stay bold, and stay purpose-driven.